Hey guys, I hope you guys are having a good day. I want to take touch this time to touch on a couple things. It's some popular conversations being had right now in the Discord community, as well as just people that I connect with on a day-to-day basis. So, um, two things I want to kind of allude to. The first thing is the question that I get asked all the time is, if trading goes so well for me, why do I still work? Why do I run businesses? Why do I do any of that? So I want to touch on that topic. The other thing as well I want to talk about, which has been probably one of the most asked about one, which is like, what does backtesting look like to me? So I want to touch on that today by going over also a trade review of a trade that I took earlier on an account, while also alluding to how that behavior of backtesting is also how I've kind of figured out how I want to trade with my system over the course of time. Now, obviously, I won't be able to share everything that I've done because I mean, technically, I spent 8 to 10 hours mentoring that in my mentorship itself. So I wouldn't be able to capture that on the video today. But um, what I will say though, like depending on where you are as a trader currently in your trading path, maybe you're still learning for the first time. So maybe just the basic understandings and concepts of backtesting is something you'd like to learn. Maybe you are fairly experienced, but you're trying to figure out a way to refine your trading. Backtesting can help you do that as well. So I want to hit on a couple of those things today. I don't know how long this video is going to be. Hopefully, it won't be too long. So first and foremost, the question of why do I still work and run a business if trading is going as well as it is? Now, for those who've been following my journey, who follow me on Instagram or see my trader stats already, you can see the P&Ls I have, and more importantly, not just the P&Ls, because for those who know trading futures, right? P&L is one thing. Getting paid out is another. And so this year I have hit a monumental point in my trading career, my record year I've ever had, and it's only 7 months into the year, and I've already exceeded any of my expectation I had. So I'll leave that conversation for another day. But so people then ask me when they see that, like, why are you still doing that? So I will say for us as traders, as we learn more and more about ourselves and what helps us trade with conviction, what is our edge on the market, edge can be defined in so many ways. And what I will say is the compliment that I get a lot from people who are in my life who see me trade side by side with me, maybe even on mentorships or on videos, they will say, Alan, you are so calm in front of the screen. I wasn't always like that when I was learning the craft, but what I can say is that a big part of how I can continue, though, to show composure as I slowly learn to size up my trades is because I know trading is not my main source of income. And so, obviously, kudos to anyone who's managed to be able to get to the stage where they can do that. But I also know that some of the full-time day traders do supplement their income with, Discord services or anything like that, which is also kind of that safety net. In the same way that I run my business, which is kind of how I create my safety net of making sure that I have an income that can be there to service my debts that I have, like, whether it's your mortgage or car loans or everything like that, right? Or maybe just, just to have those fun, explorative, luxurious things you want to do with your family, right? So knowing that I have an income coming in is part of what gives me the edge to trade with the mindset of process over profits. I am not obsessed with making money on the market. Of course, it's a byproduct. Of course, that's important in the end game of it all. But when I'm in the trade, all I'm thinking about is my system and my binary approach to trading. That's all I'm focused on, right? And I think it'd be much more challenging for me to trade like that if this was the only thing that I was doing. And so that kind of answers the question that I get today, but I think that might answer the question for the foreseeable future. If I am, making seven figures on the market, would I still hold some sort of gig on the side? Honestly, probably, right? Like, because I do enjoy what I do. I love helping people. Those who have known me for long enough know that, like, one of my big values in life is to be able to leave a legacy behind in everything that I do. And so when it work comes to business, it's about being able to help entrepreneurs be successful, help the youth be able to find their way and develop skill sets so that they can be business peoples one day, themselves, entrepreneur, those type of things, right? So, anyways, I want to just touch on that. Like that is part of my edge. The second thing is I want to dive right into the back testing part, right? So I am going to screen share here. So give me one second. There you are. So this was a trade that I actually just took maybe a couple hours ago on the market. And so I want to touch a little bit on what this is. So as you can kind of see here, oh, sorry. you can see that I took a long entry here, and I closed it out up here. And so this was a two contract trade, 10-point scalp, very, very basic overall. And as you can see in the profits, it's about $400. That's two minis for those who don't know, right? And before you begin to ask, like, oh, wow, like that's a lot of size, right? I trade MNQs. I can't scalping 10 points doesn't do anything for me. Understand that, again, process over profits, right? I didn't start out this way. I worked on building up my skill set so that I would have the conviction to take trades, obviously in a size that I'm comfortable with. And those who know, I'm comfortable scalping 10, 15, 20 points off the market, but I'm just as comfortable holding positions for 100 to 200 points on the market as well. Obviously, do you take what the market gives you? And not every day is going to be a winning day, right? So a lot of times when we trade, we do have to take into account the risk and the downside. Just like in business, we talk about this all the time. It's great to think about how much money you can make in business, but what you need to do when you're in your first year of business is protecting your downside. How much money are you going to invest into your business? And how much liquidity do you have of a runway in case of things not going well for you, right? And I think that a lot of times people just think about, oh, I could make a quarter million or half a million in this business, maybe 5, 10 years down the line. And that may be true, but will you have protected your downside enough so that you can even make it to the 3, the 5, the 10-year mark to be able to reap the gains of those profits later on, right? So, anyways, not here to talk about business, but I wanted to kind of just help draw that correlation between the two. I wanted to talk about the back testing, and I don't know, I know everyone has their way of journaling their trades. So I want to show you guys an example of how I journal my trades when I'm looking through. And there's so many different ways to go about it. I will say, even the way that I journal trades today is probably a little lighter than how I used to do it. If you were to look back at my journal notes back in like August of last year, all the way up until maybe even the end of quarter 1 this year, they were very detailed, way more detailed than this. I would note down things like my psychology at the time, what I was feeling, what I was thinking, all of that. I don't do that anymore because I have, for the most part, come to a space in my trading where I'm very content with my system. So I just trade my system. So a lot of times if I take notes, I'll take notes of a few things just to see there's patterns, but I don't note my psychology as much because for the most part, I personally believe that I do kind of have that under wraps. So now I'm going to go into the journaling notes. So I'm going to zoom in here. Hopefully it's reflecting well on your end there. So first and foremost, when I took that long trade, the first thing I highlighted was the multi-time frame analysis, right? On the weekly time frame, we had obviously very bearish action last week on Thursday and Friday. We almost took out 10 days worth of trades within just those two bearish candles. And when I say trades, I don't mean my trades. I mean the candle action that we had grinding our way up, right, to all-time highs. But within just this week alone, we have already seen that our weekly candle has, for the most part, taken out that bearish bar that we put in last week. We haven't fully yet, but we're making our way up there. Okay. On the daily time frame, if we take a look at today, as in like earlier this New York session, we had closed out an outside bar, which over engulfed the bearish bar that we had the prior day before that. So today, when we look at the hourly time frame, our 3 bar play, not the cleanest one, but we actually kind of held with the pause bar above the outside bar from the New York session. Now I'm going to show you the visuals of what that actually is later on, but I just want to highlight these are notes that I had taken down as why I took this trade. When I look at the execution of the time frames that I like to execute on, the 2 minute, the 5 minute, and the 15, personal preference as everyone has their own, right? On this trade, we had a 2 minute touch and hold of VWAP, followed by another retest of the VWAP on the 2 minute time frame with a bullish hammer, which acted as a signal bar for as an entry for longs. As this took place, we also had a clean bullish spinning top doji, which we closed up. And even if assuming that we missed that, there was another entry you probably could have taken based on the 15-minute time frame. And again, I will touch on this in a bit. From an indicators perspective, for those who trade indicators, I also noted here that, we held the VWAP, we had a 9/20/50 EMA cross, and our FF indicator, which is, a private indicator that, again, I've shared many times on YouTube before, we had a close and retest of the trigger line on the FF indicator as well. And from a chart pattern perspective, we had a bull flag, which was a continuation play with the hold of the VWAP, and we also had a trend line break, right? That we also saw on the chart. and our FF indicator also showed us a good indication for the push up. Based on these types of notes that I've noted down here, historically, if I were to take a look at trades similar to this in the past 6, 12 months, the probability of this play working out is 7 out of 10. Now, there's so much work that goes behind even understanding what that even means. That 7 out of 10 does not mean it's always going to work. Understand that. And as we backtest more and more and more, we might find that as market conditions change, that setup that you like oh so much, it might not be the setup that's going to work for you anymore. So I think that's important to also keep in mind. Okay. Now, with that said, I am going to kind of provide the illustration again, but I'm going to peel back, and this time I'm going to show you the chart. So here I actually noted down, and I had posted in the Discord as well, what I was kind of looking at. So give me 1 second here. So first and foremost, I am actually gonna, let's see here. I'm gonna change this just so I can illustrate what I was looking at. The weekly time frame that I was referring to, as you can see here, our last week had this big bearish bar. And for the most part, this is what I meant by we are basically almost overtook and closed out the prior bar. That was on the weekly time frame that I mentioned. Okay. On the daily time frame, these are the two bars that I referenced last week that really destroyed all these gains, or I should stop saying gains, but the upward move that we had, we basically wiped all of that out. And that was based on economic data and all that type of stuff, right? But this week, as we take a look at it, we have seen our chart move forward upwards, right? And for the most part, you can see that this is the daily bar that I referenced that had closed out and engulfed the prior bear bar that I was mentioning. And so as we opened up here, let me zoom in a little bit more. As we opened up here and we pulled down, because when we opened Globex opening print, we did have a pull down, but we held and then we pushed back up above Globex opening print and we continued pushing forward. If we look at the hourly time frame, we can see, and this is why I said that it wasn't really the cleanest 3-bar play, to be perfectly honest, but where we actually held here and then we broke above, that was kind of the spot where it was just right after the signal candle that I was referring to on the 2-minute time frame. But again, as we can see, we are holding the outside bar. So let me zoom in here a little bit more. Let me move that out of the way. This wick, as you can see, basically stopped at the prior day outside bar candle hold. So that's what I was referring to when I was referring to the fact that the daily candle currently held above the outside bar high that we had the prior session during the New York session. Okay. Hopefully that makes sense. And then now I'm going to zoom in further. So I'm going to now break this out into the 5, and the 15-minute time frame, which is generally it's generally the preference of how I like to execute my trades upon. So I noted here, and I posted this on the Discord. So as we were coming down, this is what you can see as the bull flag that we were kind of forming. We came down, we pushed down below, and this was a short opportunity as well that I captured. It was about a 7-point trade scalp to the downside using the FF indicator. Let me show you this quickly here. And that basically was here. That failure to go higher candle was a retest of the trigger line, and that push down was the nice 7-point scalp that we could have captured using the FF indicator. Now I'll move that back aside so it's not in the way. This was the first 2-minute tag of the VWAP that I was referring to, which we held. When we pushed our way back up, we did have a pullback down again. On the FF indicator, this was a retest of the 2-minute trigger again. Now this time though, when we pushed down, we held the VWAP once again, and we put in a bullish hammer. Okay, that retest became the signal bar for the long entry, which I entered here. And then I sold my position at basically at the touch of the trend line here. That was 10 points. I was very content with that, right? Because that's all I was looking for on this account. Could I have held for more? Sure. But there were a lot of factors for me as to why I didn't want to do that. I knew I had to leave the home soon. I had an event I had to get to. There were so many outside factors that played into why holding this trade for longer would not have fared well for me, because the anxiety of holding onto a trade while I'm on the go, historically through all my back testing, does not bode well for me. So I can sit here and be like, oh man, I'm going to FOMO with the fact that it moves so much further. I don't care. That is so important for us as traders to understand ourselves, and that we can FOMO every trade we want, but we have to know ourselves as trader, our psychology, what works for us. And through the history of backtesting what does that tell us about who we are as a trader? So I wanted to just really highlight that. Okay. What I mentioned as well was on the 2 minute time frame when we did the signal bar, on the 5 minute time frame, we also, if you take a look at it here, we also put in a spinning top doji as well in the 5 minute time frame that held the VWAP, which also acted as the additional conviction on top of this 2 minute retest for a signal bar to the long, to the upside, right? And from that, you could have just rode the long. I also mentioned that if you had missed this entry, and which you can see we did have a little bit of resistance here, the break of the trend line here, which is what gave us further continuation, which is also the break of the bull flag, if you think about it, right? What that actually was that after we broke above that, that was actually also the close of the 15-minute candle. So after we closed in a 15-minute bullish hammer that overtook the prior bars, we also had a continuation to the upside here. So if you want to wait for a 15-minute confirmation, because I know there are traders out there that love the 15-minute time frame, that could have been another reason for you to attempt the long off the second 15-minute bar. So anywho, that's just kind of giving you an idea of like some things that I was kind of referring to when I was talking about that. But again, back to the sorry, give me a second here. Back to the back testing of all this, right? If we really want to figure out what works for us as trader, we need to take journaling very seriously. Because if you are just taking blind trades, boredom trades, or whatever trades you want just to hit that extra point to get your payout, that is not sustainable behavior. And so many traders, including myself in the past, have gone through the experience of taking a trade, trying to achieve that $50 just to get the payout. But instead, we hold on to a losing trade that ends up taking up most of our drawdown or blows our account. And the level of tilt that that creates as a trader is just, it's, you can't put that into words. It's just unbearable, right? And most of the times when people tell me that, I honestly just say, take a week off. Don't touch the charts. Don't look at anything because when you're literally an inch away from getting a payout and you do something like that and you blow your account, that type of stuff just bears on you. And honestly, it's very difficult to even see the chart clearly after that. And very likely what will happen is that you will take more bad trades after the fact, trying to make up for the fact that you made that mistake in the first place. I think it's important that we recognize that when we make those mistakes, did we make those mistakes because we followed our system? Because if so, I don't think we should be tilting in any way or form, right? And if we made the mistake because we took a blind trade, you also shouldn't be tilting because in the end of the day, you disrespected your plan. And so that was the price of disrespecting your plan. So anyways, I'm just sharing that with you. I hope this speaks to some of you guys out there because I'm just sharing my own personal experience in the end of the day. I'm no expert. I haven't been trading for 10, 15 years like some of the very strong senior traders that are out there in the marketplace. I'm just sharing the journey that I'm going through right now, which is 4 years of trading from small caps to options to futures, which so far futures has been amazing for me. But anyways, I hope this add value. As always, please, if you can, drop a like, subscribe if you haven't already. Helps me build my presence in the marketplace. If you have any questions or anything in general, drop a comment down below. I'd be more than happy to answer those things for you. I'm a 10 minutes away from actually have to spend some time with another student for one-on-one, so I will sign off here, but I'll catch you guys next time. Thank you.